Let's quickly move on to our next discussion. The insurance sector is on the radar. June life insurance data has been a mixed bag. So how will the first quarter earnings season play out for this sector? To talk about this, we have Raghvesh, who's the insurance and capital market research analyst at JM Financial. Raghvesh, thanks very much for joining. And I briefly saw your note last evening where you're expecting that at least for the life insurers, margins should start improving, and growth has been very low in this quarter so far in terms of just the premium. But you still have a positive view on life insurers. Tell us why.
Hi, Surabhi. First of all, thanks for having me on the show. Coming to growth, as you mentioned it. Last year, the first 2 quarters, growth was very strong for the private sector. In life insurance, 24% YoY, which is much ahead of the historical trend of around 15-16% growth. On that base, the growth is optically looking low in this year. If we look at a 2-year CAGR, the growth is pretty fine at around 15% for the private sector. The expectation is as the year progresses, the YoY growth starts looking better. And we have already seen that in the first 3 months. Yesterday, the numbers which came out, the private sector itself delivered around 13% growth in the individual business, which is, again, moving towards our trend of a yearly expectation of somewhere around 12 to 13% growth for the sector. And that is largely in the price, is my sense. On the margin front, last year, the growth actually came with very strong sales of market-linked ULIP products, which are actually low margin for the insurance companies. As the mix of products moves more towards return guarantees and pure risk products, the expectation is margin should improve as the year goes on.
But for a company like, say, HDFC Life, I mean, in a tough year, so far this calendar year 2025, stock's already up 25%. It's done better than a lot of other large cap nifty companies, right? How much of this is in the price? And from here on, what is the trigger? Margin improvement? If so, how much improvement? Will it be first quarter? Will it be back-ended?
So actually, the last year, the price action was pretty muted for the sector, despite the strong growth, because of concerns around, first, the surrender norms, which were updated by ADI. There was the expectations that margins for the sector and the leading companies would be hit by somewhere around 100 to 200 basis points, which through their product innovation and discussions with the channels, the companies have managed to incrementally bring it down. Secondly, there was a lot of concerns around how the bancassurance sales will pan out. Now, all these life insurers, the larger ones, except for LIC, are bank-led and get a decent portion of their premiums from banca. So with that concern now easing out, we have seen the leading companies come out and suggest that they're looking at, say, 10 to 13%, 14% kind of growth from the banca channel. And when we look at the on ground, we see that even the brokers, the agents, they are pretty positive on growth outlook for the year. So that has translated into good price action for, say, an HDFC Life. If I look at historical valuations, it's still below the mean since its listing. From here, we are looking at, say, somewhere around 15% growth, a slight improvement in margins as the company invests for the future. And with that, we expect a slight improvement in terms of the valuations, somewhere around 2.6 times at this point, which gives a good 10 to 15% upside.
Okay, so still looking at some upsides in these life insurers. Got that. Raghvesh, let's talk about general insurers as well. Tell us, what do you like here? Where could, or which is the company which could see the best growth? And do you prefer overall general insurers or the standalone health insurers? Because I think overall motor third party is a big talking point, the revision in rates. So give us your views.
So the general insurance sector has actually done well in terms of growth, better than life insurance. But if we look at the companies, the listed companies, both ICICI, Lombard and Star Health have not done that well in this quarter. In terms of motor third party, my expectation was if there was a price hike to come in, it would have come in already. The news around 18 to 25% revision in rates, that of course supports the companies. But my sense is the players active in the motor space, say ICICI Lombard, they would look at this as an opportunity to grow their book rather than focus on reducing their combined ratio. ICICI Lombard, the multi-line insurer, that we cover and like, over there, combined ratio has been in a pretty good sweet spot at 100 to 103%, generating 18% plus ROEs. The concern has been on growth. Last year, the fire business, which is substantially about 20% ROE on a standalone basis, actually declined 5% for the industry, somewhere around 6% for ICICI Lombard. Now, that has actually picked up in terms of growth in this year. In the first 2 months, the growth there was 16%. If fire can keep firing, motor third party, if there is a price hike, good. Even otherwise, while the volumes have been low, there has been a ticket size increase. The larger players have been gaining market share, 7 to 8% growth in the motor segment, and continued growth from the health space. That puts in somewhere around 11-12% growth for a company like Lombard, which is good given the ROE profile that it generates. Also, I would like to highlight that the growth that these companies are reporting, they are not like to like. So they are, given the reporting change, say a 9% growth for the industry, which is being reported, should translate to somewhere around 12 to 13%.
So very quickly, apart from HDFC Life, which are the other major insurance stocks that you like?
Right now, the preference is for life insurance over general insurance. Okay. Other than HDFC Life, I like ICICI Prudential, which has disappointed on growth so far, but we believe that growth can pick up, and the disappointment is essentially a base effect. We also like Max Financial, which has given strong shareholder returns, but we believe there's room for much more.
Okay, so going for the life insurers topics at JM Financial over there. Thanks very much, Raghvesh. Good to get that perspective. So we're all prepped up for the Q1 insurance earnings season. Well.